Hello and welcome to episode number 4 for in-depth altcoin analysis, and today's episode will be Stellar Lumen, ticker symbol XLM, and this coin is ranked number 7 on CoinMarketCap, 19 cents a little more, down 4.5% for the day against the dollar, down almost 4 against Bitcoin at 3,154 Satoshi. Its market cap is over $3.5 billion, or almost 600,000 Bitcoin, and very high volume of $43 million, or over 7,000 Bitcoin equivalent per day. And all of it's equivalent because it trades against so many other different coins. In fact, in some places, this is a base main exchange currency. I don't know why the circulating supply and total supply is such a big ratio difference of like 6 to 1, but that's what the number is. I'm here to talk about technical analysis amongst the charts, and that's what I'm doing. Like always, everything is your own risk, own reward. The most heavily placed this is traded at is on Binance. So when we look at this here, this support line at 20 cents, 20.21 to be exact, well, pretty close to exact, is been key support, no doubt about it. For when it came down to it, it had a few hits here and it lifted higher. Now, markets sometimes only need that of a 23.6% correction. So after this move, when the rally was coming in, you can't know at the time, at least simply by looking at the charts, as this was going up, if the lows were actually in, or if we'd ever see this point again. Now, of course, we did. But when you're in a situation where it's very probable or possible to make a lower high, which the last high was about $1, yeah, that's definitely a concern that if it rallies, it could be a bear market rally. And now that it is back to where it came from, that creates like an inverted cup and handle, which is just another way of saying a lower high from a key point back to where it came from. Now, a lot of times after I have a situation of another test, as far as myself as a trader, I'm not that cautious, or I'm still happy to buy. But when I see a market go right to this line in here and then follow through by resisting the 18 and now back to where it came from, it's looking more and more weak, as if this thing could fall through. Now, the way I look at Fibonacci analysis, when you have, especially when it works, is often like this, as it does. That if this level, and what has now definitely been key support here at around 18 cents, if this gives in, that I expect for the price action to move to its next low. Now remember, Bitcoin's 6,000 equivalency is also a 23.6% long-term correction. Let's take a look at the rest of this chart. So as we can see, this is going back to quite some time. Now the lows that I'm using are these multiple hit lows at about 0.0012345678, or 0.123, 12.3% of a penny. So then, the next move lower is 7.6. Look at this on the 3-day, which coincides with the previous hit area. Usually within Fibonacci and these moves, that it usually pierces extra. Going back to where it came from seems more probable that it's actually going to go to even 5 cents. So I think if Bitcoin loses half its value, I think Lumen will lose 4 times its value from where we stand. The low in here was 21. Excuse me, 15.47. No. Yeah, 15.47. So this price went down like well over 4 cents, 4.5 cents more than the 20 number. However, if you're trading and you want to be safe, buying at 76 is the most safest spot to get it, compared to buying at 70 or 65 or 50. Because the lower you go, the less of a chance you will have of getting the buy, if of course that area is right for where key support is going to be. Sort of like if you rolled the dice here and tried to buy at 15 cents or 14 cents even, you failed on your buy. Those that went 16 cents succeeded on their buy. And considering this went up to like 46 cents, that was pretty darn near good. So overall, this thing is showing the general weakness. I think it's going to go in line with Bitcoin. Either the cryptos go down altogether or they go up together. That means if Bitcoin moves to 3, I can be rest assured this is going to go down. And if Bitcoin goes up, this will probably do so as well. As we take a look at this next against Bitcoin, I got key Fibonacci levels in as well. And within such, an easy way of knowing that this is a very poor logarithmic chart, look at the bottom two numbers. You got 300 and 800. That's well over 1.5x. Or 2.5x rather. But that's a small gap compared to, say, this here. Look at the move from 5,000 to 6,000. That looks a bit bigger, but that's 20% from bottom to top. So it's a poor logarithmic chart, where a half-ass small 23.6% down correction from these highs and lows, well, that's where it comes in at. Normally it should be on the upper end of the screen. So when you see these wild standard moves, that's because it looks like it is acting more like a linear chart. But in the same situation, if this thing breaks down below this key level of support, I'd be looking for a move to pierce below the 1,419 situation. Now here's a very uncommon thing to have in markets. And that is, you have a good move, in this case in a bullish level, higher, which happened from this low point to this high point. A 23.6% correction down, I consider that of a half-assed one. It can be sometimes all it needs. And then, of course, if it breaks resistance, it can make a nice leg higher. 38.2%, that's normal. That's nothing. It's normal. 61.8%, it's a little deep, but it's a normal deep-sized correction. 76.4% is generally the most you're ever going to give back. Because something I don't see too often in markets is a situation where it has a good rally, it comes back to or below previous low, and then makes a leg higher thereafter. I don't see that too often. But I kind of see here, I mean, that's pretty much a matching low to this low, is it not? Let's take a look at this on CoinMarketCap. And when we look at this chart, this is a linear scale. This is the log button here. Much different chart. But what we can notice is that this low at 300 is about a 76.4% correction. So it's about as deep as I like to see before the leg higher. And this isn't that big of a leg higher, but it has been able to hold and stay above it really, really nicely. So it's well above a half-assed correction mark, which is shown in here given the fact that it's got a nice move above the 2,500 point. And a decent size move down to here, well, that would be what I would expect if this level breaks down, and more so likely if Bitcoin has a tremendous move lower. Very short term, This is a situation in which the market has, it's not even worth covering this chart. So this is a daily. Anything short term worth noting? Okay, I guess this is worth noting. So you've been in a consistent downtrend. And when we look at key support, you can see, regardless of how you played the trend change with this big move lower, you have probably a standard leg size lower going down to 3,000. So the volatility has sparked up and has not stopped. We look at the size of the candle since the 2300 hour timestamp. Thus, the last 7 periods have all been significant compared to all of the periods that preceded such. The action had the market come back to where it came from, to the 18 average of highs, and has had a move that is now sparked below the 18 lows. So therefore, we got the symmetricalness coming into play, which means bullishly, one of the things you're going to need to see is to come and get by this trend line now that you've had this test of it. Because when you look at this on the short-term time frame, interesting part of market dynamics is you've got a key up move. I mean, it didn't do much, but it had one leg higher from the 18 average of highs, which barely made it start to rise. So therefore, what I like about this is I'm going to look at the key Fibonacci, which is roughly around here. This is going to be the big spark move, because if it successfully can have a correction making a higher low, then any directional move up like that wouldn't surprise me if there's some decent sized moves, because this move would be looking at least more legit for at least one more leg higher, or a few more legs higher at least. But if this area doesn't hold as support, as we see it leaving the 18 average, what has been in a big downtrend, we start to see weakness amongst the 18. Idea of seeing weakness is maybe it goes down to 3,100, and then it sticks around there, not getting above much the 18 of lows for maybe the next 3, 4, 5 periods. That would be an example of showing weakness. If this just continues to go down, and we notice that this area, which would be 61.8% from this high to this low, starts to give in, you'd be noticing that this entire move that we've been seeing would be that of a bear market rally. And given that the downtrend is in, then you expect to break below previous support and make at least one more additional leg lower. And with that, I'm now going to conclude this video. So I'd like to thank you for tuning in, and have yourself a great day. Bye-bye.